Joining me now is Richard Carleton, the CEO of the Canadian Securities Exchange. Great to see you again.
Likewise, Mark.
Here we are a year later. You sat right there. I sat right here. We're going to get an update from you. And one of the things you talked about was at the time that the CSE was winning the lion's share of new listings in the Canadian mining sector. So you had a goal in 2023 of 100. You almost got there, 92. What's the picture like now? What are the current trends?
Well, investment, I think, has shifted from the battery metals, and I think interest seems to be focused primarily in the gold and precious metals space right now. So those companies do seem to be successful both in raising their public round of financing, and the existing companies do seem to be having some success raising additional capital. But that said, the capital formation opportunities right now are kind of few and far between for really all issuers. It's pretty slow out there right now across the board.
And is this because in part interest rates are clearly higher for longer now, and it's a struggle?
Yeah, I think that's a big part of the story. And I think the number that people should be looking at is maybe less the overnight rate, although that may influence behavior by the retail investors perhaps. But the 10-year number is really more important for the miners when they're developing feasibility studies and trying to forecast the commercial nature of the project that they're pursuing. That makes it more challenging, particularly when costs to perhaps or to eventually put a mine into production have also increased. So as a result of inflationary pressures, power, diesel, equipment, labor costs are all substantially higher than they were, say, 5 years ago.
So capital is shifting into precious metals for obvious reasons. Gold's at a record high, silver's taken off over $30 now. Is it also because investors are realizing that this move to the energy shift and also the move to EVs out to 2030, 2035, whatever date you want to use, it's not going to be in a straight line, and things is kind of maybe bogged down in certain pockets?
Yeah, I think that's true, and I think it pays to look at the specific commodity. So I think nickel is under tremendous pressure because of the appearance of Indonesian laterite nickel on the world markets and battery grades, which is, again, problematic for certainly North American potential producers. I think there's still a lot of interest in the copper side, and we're clearly seeing, of course, continued investment in the graphite and lithium space as well. So I don't think but you're right, it's not going to be a straight line. It's going to be, I think, continue to be challenging, but I think there will be some significant wins for investors in that space in the coming years.
Also, when we last talked, you talked about liquidity being around 2017 levels. Is that improving at all?
No.
All right.
I wish it were otherwise, but no. Again, I think the retail crowd is still very restrained in their activity in the early stage or small cap portion of the market. And I think one of the other challenges that people need to consider is how are companies going to engage with younger investors, self-directed investors, people who get their investment information maybe not by perusing detailed reports or analyst recommendations, but they're going to YouTube and TikTok, and they're reading the Reddit threads and so on. And so I think it's incumbent on the companies to understand that and to engage with this new generation of investors, think about how they can use those tools to try to engage better with the younger generation of investors.
Right, that's sort of a running theme in our conversations with the likes of Chad Williams from Red Cloud, Rob McEwen we had here yesterday about, they're talking about the labor shortage and attracting young talent into the sector, and you're talking about finding new investors who are looking at bright, shiny things and maybe more interested in, say, crypto or other areas.
Well, that's right. And I think, mining has a couple of things working against it, again, in the mindset of the younger generation. The first one is it takes a long time to advance a project to the point where it would go into production, right? I mean, it's not just the delays or issues in permitting, but it's a very, very long time to do the drills and to understand them and to basically shape the ore body and so on. And the other issue is that I think a lot of folks just assume that mining is environmentally hazardous. It's not good for the environment. And so, again, particularly in the battery metal space, I think the companies need to explain their story to the marketplace. And you see them increasingly doing this. So, for example, indigenous issues are and reconciliation and involvement is a key part of a lot of the decks you see, even for early stage exploration companies. So building that relationship with the local community, for example, investors want to hear that story. They also want to hear how the company is proposing to reduce the environmental impact and what they are doing and remediation of the site once the project has been completed. All of those issues are really touched on by I think, the more forward-looking companies.
And just lastly here, Richard, a good news story that we can continue here is the relationship, or at least getting OTC quotes, over-the-counter quotes in the United States for Canadian miners, and sort of refresh us and remind us as to why you call that a phenomenal vehicle for companies to gain investment and to gain a broader reach.
Well, one of the greatest bargains in the world public markets is being a reporting issuer in Canada, and in particular, of course, a reporting issuer on the Canadian Securities Exchange. And one of the principal benefits of that is that Canadian companies can raise prospectus-exempt capital in the United States without having to become a reporting issuer in the U.S. And that's a real step up in class and costs to become that reporting issuer. So once you have raised that money, though, they also have the benefit of an organized market that trades in U.S. dollars, the same hours that traded in Canada, so that investors can continue to buy, and they can see the value of their holdings in U.S. dollars, and a marketplace, an organized marketplace that is accessible by all of the U.S. brokers, the discount folks, the zero commission folks, as well as the full service brokers. Anybody can trade these Canadian stocks without having to take currency risk or otherwise send that order up to Canada. So it's a phenomenal benefit for the issuers, in particular the mining community, to be able to broaden their capital formation goals to not just Canada, but also tap into the U.S. capital pool, which, as we know, is the largest pool of equity capital in the world.
Well, thanks for the insight today. Great to catch up.
Absolutely, Mark. Thank you.
All right, good stuff. Richard Carleton, the CEO of the CSE.